648 is the Department of Financial Regulations kind of annual housekeeping bill. It pertains to banking, insurance, securities. The captive provisions were in another bill, which you voted on the House floor a week ago. And this bill was voted favorably by Commerce as a strike all amendment, but there weren't a lot of amendments. Most of it was just clarifying. They didn't add other bills, which they sometimes do, off the wall. That being said, it's 84 pages long, and there are 58 sections. And so what I maybe could do, if this is helpful, this isn't quite ready to like be published, but I summarized kind of like the groups, the changes. And then if there are any you want to look at in greater detail, we can do that. A lot of them are like what I'm not going to say are the things that are just conforming changes, right? Or things like where, you know, oath is referenced and it should be oath or affirmation. I'm not going to like talk about that stuff.
Thank you for that.
Okay. But I will give a general overview of the substantive provisions, most of which basically conform with current practice. It's just codifying. So that being said, the bill is divided into several parts. The first group, sections 1 through 34, pertain to financial and related services. So these are kind of the non-bank entities. These might be money transmitters, check cashers, licensed lenders, all of those entities. So that's what we're going to be talking about now. And in terms of, you know, what changes were made, I'm going to give you just kind of a general sense. There's a change to the commissioner's licensing authority, basically expanding the commissioner's authority when they're looking at applications to also consider what's in the public interest. With respect to suspensions of a license or a revocation, the commissioner can look at whether the applicant or whether the licensee has been convicted of a felony and whether that felony is applicable to the duties of the licensee. Also, there's some clarification with respect to the due process rights of a licensee, and it basically just specifies how to file a request for review, a reconsideration, and then what courts to go to and so on. But pretty standard, just clarifying. There are some provisions with respect to a change in control of a licensee that allows the commissioner to consider the financial and business experience of any applicant or entity that's trying to purchase a licensee. In addition, there are some additional requirements with respect to money transmitters specifically. Most of those changes have to do with conforming with NAIC Model Acts, the National Association of Insurance Commissioners. Insurance is a lot of the insurance, actually not NAIC, I don't think that's NAIC. It's money transmitters. The national banking, whatever the entity is that does the same thing for banking. There's a Model Act. And so there's an exemption here for certain money transmitters from having to get a license or get approval for certain transactions. And they're basically routine things that aren't a major change in control. Then just a specification that any annual reports that are filed are kept confidential. Yep.
My assumption is that not having an application for a license means that people who are not applying for that license are not paying a license fee.
That is correct.
Okay.
Thanks. And
that's fine.
Well,
okay.
Well, that's just for the change of control. It's not for the license. So it's whether or not you're have to get approval. So I don't think there are any fees associated with that.
Thank you.
So good question. I hadn't thought about that. And the other change is consumer litigation funding companies. This is technical because instead of having to get a registration, as they do under current law, they now get a license. It's purely a change in name. There's no substantive change at all.
Hi.
I think they're just trying to make all their statutes consistent because you're cross-referencing licensees and it makes it a little bit easier.
No fee, no fine, no.
There's no additional fee or no change in any of the fees. It's the same amount. Then, with respect to money services in particular, it looks like there are a lot of changes with respect to virtual currency kiosks, but there substantively are not a lot of changes. Basically, what they did was they moved all of the virtual currency definitions that were in the little subchapter on virtual currencies to the big subchapter 1 of general provisions. So all of the definitions for the whole chapter are together, most of them. So there's a lot of repealing and codifying, but not really changing things. A little bit tightening up some of the definitions, to just clarify that, for example, with respect to virtual currency kiosk operators, that all types of business models are included in the definition. And let's see. Specifying that money transmission kiosk, I think under current law, it might just specify that it means a virtual currency kiosk, but that's not actually accurate. It should be other kiosks like Western Union might have a kiosk where people can transmit money. And so just kind of cleaning up that definition a little bit. And then there's some other provisions that just add places where references to banks are made, and there should also be a reference to a credit union without going into detail, that type of change. And then let's see. So then the next group of sections pertain to also in the banking division, but these are the financial and related institutions. So these are your banks and your credit unions. And so on. And so the changes here, the first group of changes, sections 15 through 33, pertain to the consumer protections chapter that applies to banking entities. And I should also, it's a little bit deceptive because I'm saying that this is only institutions, but for purposes of the consumer protections, some of them also apply to the money services. The big change here was an attempt to kind of clean up the definitions because financial institution is used throughout, but that term is used differently throughout Title VIII. And it gets a little confusing to keep track of what's being spoken of. So one of the changes is to the privacy, the financial privacy subchapter, which is the broadest, in terms of general applicability. All entities that have financial information, consumer information, have to keep it private. That's one place where financial institution was referenced. That has been stricken, that term, and replaced with regulated entity. And that's defined as essentially any entity subject to the commissioner's regulatory authority. So it captures everybody, all financial entities. I'm just trying to see if there was anything. But I think that's the biggest change with respect to financial privacy. With respect to disclosures required, again, under consumer protection, required lending reports and disclosures. Just specifies, clarifies that it applies to basically all licensed lenders. I think that might have been one of the other instances where it wasn't really clear. So just clarifying. Oh, and section 24. Oh, okay, no, it's not what I thought about. It has to do with the anti-discrimination provisions, but just clarifying that they apply to lending institutions. This subchapter is specific to lenders. Let's see. Where loan escrow accounts must be held, either in a depository institution or in an insured depository institution, as defined under federal law, or credit union as defined under federal law. So just like that's just clarifying. That's sections 27 through 28. Still in the consumer protections chapter, these are what are called the basic banking rules. Here's one instance where financial institution is referenced, but it's qualified as a Vermont financial institution, and there's a specific definition: state chartered banks, credit unions. Let's see. Section 29, this is the subchapter on compliance with federal law. Basically just saying any person chartered, licensed, or authorized under Title 8 to do business has to apply with the applicable federal law. There are some sections in subchapter 7 of consumer protection that pertains to reverse mortgages. And basically clarifies that non-banks, not just traditional banks, financial institutions, are subject to counseling requirements to make sure consumers understand the terms. Then sections 34 through 36 pertain to the supervisory authority of the commissioner. So there, let's see. Okay, so there are a few sections that have to do with the governing boards of certain institutions. Sections 35 and 36 pertain to stock banks, which are owned by their shareholders, and mutual banks, which are owned by their depositors.
Stock banks.
Stock banks,
Yes, thank you.
yep. And so under the law, they're required to meet up to 4 times at least annually. So there's new language that says you should meet monthly, but if you don't meet monthly, the governing board should appoint an executive committee that will meet monthly and then take minutes, which are then approved by the full governing board. That's going to pop up later on. Then there are some changes to the loan authority of certain financial institutions or banks. So this was a policy decision that the department reached. Under current law, a financial institution cannot make a loan that exceeds 10% of the institution's capital. The testimony was that threshold was pretty low and pretty onerous. It was the smaller banks that were kind of running up against that threshold. So they removed that. There's still a 20% hard cap. So there's still that threshold. But then anything less than that, basically what's required is that the board of the bank in its written policies has to be very transparent about when loans require board approval. So it's less prescriptive, but it does require transparency, and the commissioner will review the policies. And so it gives a little more flexibility. Yeah. And then there are some additional provisions about greater loans, 50% of capital, up to 50% that can be loaned to a corporate group. And then there's a definition of what's considered the bank's corporate group. And that is if any entity that the bank has owns 50% or more of any class of voting security. So if it has control over the entity, it's considered a corporate group, and there's greater lending authority. And then there's a very long, confusing section that is consistent, I'll just say, with OCC language, the Office of Controller of the Controller of the Currency, the federal banking entity. And it describes when two people, this is getting really weedy. I didn't even mean to get like so far into this, so
You can come back out again.
why don't I?
Okay.
All this thing has to do is when two people are considered a single borrower for purposes of meeting that cap, and it's long, but it describes when there's a common enterprise, blah, blah, blah. Okay. So, let's see, okay, meetings, clarification with respect to credit unions, joint deposits or co-borrowers just specifies that only one depositor needs to be a member of the credit union. One of the co-borrowers has to be a member of the credit union, but the other doesn't. Mergers of credit unions, current law requires that all members of the merging credit union that merges into the surviving credit union have to approve the merger. Current law also requires that all members of the surviving credit union has to approve the merger. The proposal was to strike that latter provision. That it was really the members of the merging credit union that were going to be most affected. And they're the ones who should be, otherwise the board of the surviving credit union was a department that was adequate to ensure protection of the members. Okay. Oh, so in insurance, number of provisions, but one was kind of interesting. I don't know how we missed this over all these years, but there's an unfair discrimination prohibition that's applicable to all insurance companies. And right now, it doesn't include race, religion, or national origin. So those are now added. Then securities, this might be the one section where there might be slight changes to fees. Anyway, I'll let JFO speak to that. But it has to do with registration of securities, cleaning up the law because there are certain entities under federal law that are exempt from filing registrations. They've never been filing them, so it's really just making the law consistent with practice. So I don't think there's any change in fees, filing fees. There is a provision that clarifies how notice filing fees are calculated. They're now supposed to be based on each share class of investment, as opposed to the portfolio. Not sure what that ends up meaning in terms of the amount of fee. See, there are some changes to the Vermont and also in Securities Vermont Financial Services Education and Victim Restitution Fund. So if there are securities violations, this just clarifies who's a claimant. When you forfeit any award, if it was based on your committing a fraud, things like that. Finally, some miscellaneous provisions. It looks like you're repealing the Insurance Regulatory Supervision Fund, but it's actually being repealed and moved to another section. It's identical. There's a requirement that investment advisors purchase and maintain adequate insurance for the risk of cybersecurity breach, and that's overseen by the commissioner. And that's pretty much it.
Yeah.
Welcome.
I have two questions. One is any of this in response to federal changes to banking laws so that we're just sort of backfilling our own laws?
I don't know if the recent changes,
Okay.
some of them are in response to federal law that were just never
Okay.
cleaned
None of
up.
them are recent.
I don't I'm not aware, I'm not certain of that, but I'm not aware of any.
And then I'm so sorry for this question. Are you aware if the committee considered adding any guidance on the penny to this bill? Yes.
I was not in the room if they did.
It seems like an appropriate bill for it to go in.
Yes.
Okay.
Senseless.
Does anyone have any questions for Maria? Yeah.
I'm so sorry, and it doesn't affect my willingness to help you get this out of committee, but on page 49 on limitations, I'm trying to think through the implications of the language that allows an extension of credit outstanding at one time to a borrower in excess of 20% of its, I assume its is the borrower's capital, right?
No, of the
Of the lender's
bank.
capital of the banks. And then how did they get to 50% if the bank is lending
to itself, to an entity that it has control
over?
over. I think that was
So it's an internal.
a corporate group, but then that's defined as an entity that it controls, has a controlling interest.
Okay.
But we can look at it more
I'm just trying to figure
specifically.
out, because there's a lot of its in there, I was just trying to. figure out how to-
Yes, no, I appreciate that. Yes, so, we'll just start at subsection D. So a Vermont financial institution shall not make loans, derivative transactions, extensions of credit outstanding at one time to a borrower in excess of 20% of its capital.
You need the bank's capital.
Correct. Or to a corporate group in excess of 50% of the bank's capital. And then as used in this subsection, corporate group means a person and all persons in whom it owns, controls, or holds the power to vote 50% or more of any class of voting securities. And I can see how that's confusing, who's the it? But I think it's consistent that it's meant to be the financial institution, but
And
I believe.
give us context on the risk assessment that was done in context of 50% as opposed to 20%.
Why it went up for corporate group.
Yeah.
I don't know if the department specifically spoke to that. I know that there might be people in the room
Yeah,
that,
Maria's done. We can ask Chris.
Yeah.
I don't think we need to tag people.
Yeah.
Okay.
I'm curious about the answer too.
Okay.
Anything else for Maria? Okay. You're welcome to just say what you have to say from right there too, if not.
Sure. Afternoon to join the fiscal office, like Maria, summary. We reviewed this bill and could not find a fiscal impact.
Thank you. Chris, do you want to come sit first?
First, to answer, for the record, Chris Delia, President, Vermont Bankers Association, new guidance issued on the 23rd of December, which helps to alleviate some of the concerns on the penny. And the fact that the Fed is reopening their circulation centers so that we will see more of the existing pennies circulating in the marketplace. No more production of new pennies, but more circulation of existing
We
pennies.
don't have rounding problems anymore.
We may not, but that's the new guidance that came out in December.
Okay, thanks.
To answer your question, Representative, so this is, the banking statutes haven't been updated for decades. And what this reflects is new structures in the marketplace of corporate groups that have come together. So you and I come together under a corporate structure in ownership. And this is clearly helping to identify where those corporate groups lie and the responsibilities of lending to those corporate groups. You may be looked at as an individual, the 20%, but as a corporate group, we may own something different. And that's where this is creating additional clarity as to how you lend to those corporate groups. And it's just a reflection of 25 years difference in the marketplace when compared to when we looked at this decades ago.
Just ask a question. So if something is owned by the bank 50% or more, does it automatically then become part of the corporate group of the bank?
We don't own it. We're lending to the group.
Okay.
It's not the bank that's in the ownership position. This is guidelines for lending authority to our customers. All of which is overseen by the regulator.
Seems like, what just seems like to understand, I think one impact could be actually to limit the bank's liability because there could be more than one partner.
Well, the problem, so the problem that they're seeing in the marketplace is these different corporate structures where you've got multiple owners. And that's where they've run into some situations.
Anyone else?
Chris, is there, do you have an idea of how much is in the victim restitution fund? You might not know.
I do not know.
I don't know if JFO knows.
JFL will find out.
Just a question, yeah. I saw that in there. I was like, huh.
Don't.
So credit unions are brought into the fold in more of this. That must be welcomed by your members. Thank you.
It's overlooking a governance structure.
Yes, I know.
So
Organization, yeah, I know.
that's what I'll combine my comments to, governance structures.
Do you have anything else you want to say about the bill?
Yeah,
Okay,
we support the bill 100%.
great, thank you. That was a sentence I was like.
Thank you.
Here.
Sure. I'm a little flustered by
Thank
it.
you.
Thank you.
Anything you would like to say, Representative Kimball?
No.
Usually the thing that we say when we're doing anything.
Madam Chair, I would move that we pass fine H648 favorable.
Thank you. Representative Kimball moves we found 648 favorable. Representative Maslin seconds. Look at you, you're ready. Thank you.
Ready? Please call the roll. Madam
Is there
Chair?
any discussion? Seeing none, if the clerk could please call the roll. Thank you.
Representative Brannigan?
Yes.
I'll vote yes as Representative Burkhardt, Representative Higley,
Yes.
Representative Holcomb? Yes. Representative Kimball,
Yes.
Representative Maslin?
Yeah.
Representative Odie?
Yes.
Representative Page?
Yes.
Representative Wazizat?
Yes.
Representative Canfield?
Yes.
And Chair Kornheiser.
Yes.
We have voted the bill out unanimously. 12-0. Thank you. 12-0, or 11-0. First vote of the year. 11-0-0. Thank you, Star Trek.
Thank you. Representative Burkhardt, would you like to report this bill? Sure. Thank you. And with that, we are done for the day.